Hello, everyone. Welcome back. This is the Futuristic Tax Planning Community rather, and I'd like to welcome everybody. This is one of the first few sessions for the community, and I'm going to be presenting the first few just to kind of lay the framework and foundation for what I hope will be an opportunity for all of us to build on and share our own experiences and excitement and ideas. So it's going to be very dependent on the members of the community, not just me. But in the beginning, I want to start it off with some of the experiences that I've been through after doing 40 years of tax planning, financial planning, estate planning, and now moving into retirement, but with a passion still to help as many people as possible. So I want tax preparers, tax professionals to step up the game a little bit and do more futuristic tax planning on top of, not instead of, what you do now when you do tax planning, and that is, minimize tax bills year to year, but also to take it to a level where we anticipate that people will have to pay much higher taxes in the future as we have in the past, the last time our national debt got out of hand like it is now. So we're going to continue to study that here in the first few sessions, and we're going to move from there to effectively divorce the IRS as much as possible with our clients and create as many tax-free income sources as possible while rates are historically low. Tax rates may be lower now than they'll ever be in the rest of our lives. And that was the case in 1945 after World War II through 1985. So we may have to go back to that. And I want to reinforce that so that we all believe that and we're all on the same page. So I want to show you a little video here, an interview with the former Comptroller General of the United States, David M. Walker. He's being interviewed by David McKnight, who's a multi-published best-selling author on this situation, and he has a documentary out, a movie that was in the theaters, and it talks about the history of the national debt and the way that we're just not running the country properly from a fiscal standpoint and what it means. And he gets the opinions from former Comptroller General David M. Walker, and he gets his thoughts on where it's headed and what has to be done. So let's listen to that, and then I'll have some other thoughts to share.
Can you talk a little bit about, we know that what's driving the national debt is Social Security, Medicare, Medicaid. Can you talk about where we were in terms of the day of reckoning for those programs prior to COVID-19 and how much those days of reckoning have been accelerated as a result of COVID-19?
Well, prior to COVID-19, the Social Security and Medicare trustees estimated that the so-called trust funds, which I call trust the government funds, the trust funds for Social Security on a combined basis were supposed to go to zero in 2035. But now, because of COVID-19, it's estimated to be 2031, 4 years earlier. And Medicare Part A, which is hospital insurance, it was supposed to go to zero before COVID-19 in 2026. Now that's been accelerated to 2023, 3 years earlier. And what does that mean? Well, when the trust fund goes to zero, you can only pay bills with money that's in the trust fund. You'll still have revenue coming in for both, but it means that payments to hospitals would have to be cut 10 to 15% immediately and across the board. It means in the case of Social Security that Social Security benefits would have to be cut 20 to 25% immediately and across the board. Quite frankly, both of those are unacceptable and undesirable outcomes. All the more reason why we need to recognize reality and start making these tough choices sooner rather than later, so the miracle of compounding can start working for us rather than against us, which it is now. Well, there are two real fiscal sustainability metrics you need to look at. The first one is debt as a percentage of the economy. And we have passed the all-time record of debt to GDP, which was achieved right after World War II. But unlike the end of World War II, where we brought down debt to GDP dramatically between and 1980, we're now adding debt to GDP at a rapid rate and are planning and expect to continue to add to it even after we defeat COVID-19. The second metric you have to look at is interest as a percentage of the budget. Because what do you get for interest? The answer is nothing, absolutely nothing. Right now, we're in an unusual situation because we're adding debt at record rates, but because interest rates are so low, our interest expense is not increasing. But that's temporary. And why is that happening? Because we don't have regular market conditions right now. The Federal Reserve is self-dealing in U.S. debt. It is buying a significant percentage of all U.S. debt issues. It is artificially holding down interest rates in order to try to help with the economy and unemployment. That will not be sustained. The other reason that we have a problem is because you've got some liberal economists who've come up with this new modern monetary theory that basically says that deficits and debt don't matter as long as you can borrow in your own reserve currency unless and until you have excess inflation. Well, we don't have excess inflation now, but if we follow that theory, we will have excess inflation. And the only question is when and how much, because that theory is contrary to history. It's contrary to the long-established macroeconomic principles. It's based upon a flawed comparison of the United States to Japan, and it's downright dangerous because politicians are already fiscally irresponsible. The last thing you want to do is give them an excuse to be even more fiscally irresponsible. But you cannot solve our problem solely by taxing the rich. The numbers don't come close to working. Tax rates will never be lower than they are now. And contrary to what many people have told us for many years, that, oh, gee, you want to defer as much, income as you can because you're probably going to end up paying a lower tax rate when you're retired than you are when you're working. That no longer is a credible assumption.
Okay, so I hope you can see that we've got a serious problem here, and we are just letting it grow and grow. We need to do something about it, and I think it's the perfect time for tax professionals to step up and guide their clients into a better position for whatever's coming down the road at us. So we've been through some of the groundwork, the background. We know that there are problems in the profession. There are problems that have been around for decades and decades, and some new ones that are coming out now. And those include the stresses of deadlines and complex tax rules and low pay for the stress and the hard work that goes into it, competitive pricing, even though there are fewer and fewer tax professionals coming into the business and so many boomer tax pros that are retiring. So this is a good time to have another avenue, and that's what we're talking about here. And it's very timely because it's a bit of a perfect storm coming together, and we can do a lot of good for our clients. Now, to take this to the next level, I want to talk about the pain points. Now, every one of you in this community has probably done tax preparation and some tax planning. The tax planning may not be well defined and consistent with every client. It may just be for a handful of clients. And what I'm talking about here is making things a little bit more consistent, a little bit more accessible to all of your clients or most of your clients. So as you do that, you're going to be introducing financial planning discussions and focusing on them as tax planning opportunities. And I'm a firm believer that the tax planner ought to be the quarterback of all of this. You have certified financial planners out there. You have investment advisors. You have financial services professionals or associates / salespeople. And all too often our clients are falling prey to salespeople. So I want you to kind of take control of that, because taxes are the biggest cost that we'll face and the biggest hurdle we have to overcome to reach financial independence. So if we can tackle the biggest expense, and the tax professionals are the ones to do that, then they ought to take the lead. Now, that doesn't mean you're going to be making all the recommendations, and you may have to rely on financial planners. You may have some that you work with already. I'm suggesting that you work a little bit more closely with them, have meetings together. Don't just hand people off to those advisors, but learn from them. Do the work together. Charge your client for the time that you're going to be putting into it, but your client's going to use you as a crutch to make sure that what they're hearing does make sense. And two heads are better than one, and your knowledge of the tax rules and just experience in the world and with all the different clients that you serve, you would add a lot of value to each and every client's efforts to do more financial planning. So this is a step toward financial planning, and it's not complete financial planning. You're not going to be on the hook for that unless you have a CFP credential already, and then you know what you're doing. But as we move in that direction, it's going to be a little bit uncomfortable sometimes. So I wanted to take this opportunity to say it's very important that you have an objective mind. We all have these preconceived notions that something is good or something is bad, and a lot of those have to be challenged. The world is changing rapidly, and there are a lot of things that we may not understand as clearly as we should. And that's what I want to open your minds to. I want you to understand that some of the products and strategies out there are better than you think. So you have to be open-minded in order to feel that and believe that and learn that. And then you can see where it works. I think a lot of them are misused. A lot of them are oversold. A lot of them are sold for the sake of the seller, not the buyer. So I think we can fix all those things with our involvement, but it doesn't mean that everything is bad. Permanent life insurance can be great in certain situations, and it's not appropriate in others, but it can be sold in almost any situation. So we have to open our minds to the fact that things will work where they'll work, and they should be placed where they should be placed, and not used in other places, and not used in a harmful, greedy way. So just because it is sometimes done that way, don't write it off as it shouldn't ever be done. As soon as you see advice that says you should never do this or you should never do that, I would say take it with a grain of salt and look for opportunities to learn a lot along this journey and see where maybe we've been wrong, or something that we used to apply doesn't apply anymore. It's just not true. Or maybe it never was true, or maybe it was, but now it's not. So just be open-minded and be objective. And I'll do my best, and we'll all do our best to bring questions and answers to the table so that we all get better. Okay? Another important part of this is that there's no one answer a lot of times when you're doing financial planning, and therefore when you're doing tax planning. You need to understand that there could be two ways to skin a cat, two ways to get to a destination, make a strategy come to fruition. In other words, somebody can get to a goal by buying term and investing the rest. In some cases, they're not going to stick to that plan, and by buying a permanent insurance policy, they might be better served. Does that make sense? Same thing with investing. You can get a 12% average return if you take more risk, and some people don't want to take that risk, and they shouldn't be taking that risk. Some people maybe manage too conservatively when they're willing to take that risk. So there's always more than one answer and one way to get to a target. Taxes and accounting are more of a science compared to financial planning, and financial planning is both science and art. But because there's art involved, that means you have to be flexible in understanding the different ways, and you have to try to marry those different ideas up with the personalities and the financial circumstances of each client. And that's what I've always loved about it. But that's where you're going to set yourself apart. If you can do that for your clients, and you're honest and trustworthy, which I hope everyone is that's in this community, and if you want to prevent them from making mistakes, you want to hear the way that these different strategies will work, and you want to help them make the decision. You can always leave the decision to them. You can always say, everything I hear sounds right, and that you're not going to make the decision for them. That's all fine and good. But the more you get involved with them feeling comfortable with their decisions, the more value you're going to provide, and the more valuable they're going to see you, and they'll pay for that. You will learn something every time that you work on a new situation, because there's so many different ways to skin the cat, and you'll hear different ideas coming at you all the time. So that will feel a little overwhelming, but that's why we're doing this as a community. That's why we'll be able to help each other with our own experiences and stories, and my experiences and stories, and working with people that I can bring to the table to help you if and as needed. It's going to be a lot of fun, but it's going to be one of the things you're going to have to be ready to do. You're going to have to be able to get out of that comfort zone and open your mind to new things. And they'll come at you. You don't have to go out and find them. So be open-minded and know that it's for a great cause. You're going to help save millions of dollars for your clients. Now, the nation's still going to have to come up with the money to fix its problems, but that's not your responsibility. As a professional advisor, you're responsible to help your clients pay the least that they have to, pay it legally, but choose when to pay it and choose how to manage it so that you take advantage of the best tax scenarios and you reduce the biggest cost to their future financial freedom. The other thing that you're going to have to deal with is selling. And when I say deal with it, I know that a lot of people just feel like they don't want to do any of this because they can't sell. They don't want to sell. They don't want to be looked at as a salesperson. That's a legitimate feeling. I felt it myself. After 6 years in public accounting, I left the industry to seek my CFP, and I worked in organizations where they sold products and made commissions, and they wanted me to be there to help make it part of a plan instead of just selling based on sales pitches. So I enjoyed it, but it was intimidating and it was scary. And the way that I got over the whole anti-sales sentiment was to learn why something makes sense, when it makes sense, when it doesn't make sense, when it's overpriced. You know, that stuff comes with time, and you'll learn as you go, and those situations will always change. Those parameters will always be changing. That's why it's important for you to be a part of this community where we can help each other, as well as to work with what I call tax-free tutors, advisors that are in line with our philosophies as to who we're serving here and how we're doing it. And we're not selling products. We're teaching clients why they need to do something. And when that kind of struck me in my career, my early career, I came to feel that I was doing a great service for people if I was preventing them from going out and doing something that could be more harmful. I could sell. Suddenly I could sell, and I wasn't really trying. I was just teaching. So you got to learn along the way. You got to be open to it. You got to work with trustworthy people. And then you got to just convince clients to listen and help them understand. More than anything, we're helping them understand why something purports to be good. If something was designed to serve a particular need, we explain how they designed it to meet that need. And we explain to them that they have that need. So, things I want you to take away from that: be open-minded, be ready to learn new things, be ready to take control, more control than you may have in the past when you referred people away. Be the quarterback, because you deserve it, your clients deserve it, and that'll enable you to be paid properly. And we'll all learn a ton of things along the way and serve our clients well. So be ready to learn. Don't worry about selling. Worry about learning and teaching, and being a trusted, honest advisor when your clients need them. All right, so that's enough for this session. I'll be coming out with another one real soon, and shortly after that we'll all be together. The sessions will all be live, and we'll be able to share our own stories and concerns and ideas. So I look forward to those, and please share what you've heard today if you like it. We need more members, and I would appreciate anything you can do to support this. So thank you, and I'll see you again soon. Bye-bye.